Good evening and welcome to another edition of the Benny Randall Show. I'm your host, Benny Randall Jr., aka The Motivator, aka Business Advisor, aka Global Entrepreneur. All right. It's not a game, it's a lifestyle. If y'all don't know, y'all already know. And today, we coming up to tax seasons, and I figure who better to bring this in here is the global tax expert himself, Mr. Michael Muse. He has a powerful tax company called since his inception over 50 years ago. He's not 50, but the company started before him. Income Tax Service has been trusted name in the field of tax preparation, tax planning, asset protection, unwavering dedication to quality service, meticulous attention to detail have cemented his reputation as an industry leader. He specializes in tax preparations, tax planning, and asset protection. Man, this is amazing, Mike. This is what people need. This is what people need right now, going on. So tell me how you got into the tax business, Michael.
Well, Benny, as you said from the very beginning, I'm not 50 years old yet. So my parents actually started the business. My parents actually started the business 2 years before I was born.
Okay.
Yeah, my mom worked at H&R Block for one tax season, and she did so well they wanted to promote her through the ranks working there. And my dad said, "No, no, 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 no. You're not gonna let corporate America get even more rich off you. You going back to go back and finish school. So pay for to go back to school." And he said, "Next year you're gonna start your own business, and I'm gonna give you the money. We're gonna get it started." And
Uh-huh.
so, of course, after I came, as soon as I was able to write my numbers and write my letters,
Uh-huh.
we would go to people's homes, and I would have to sit right next to her. And back then, there was no printer machine. We had the carbon copy paper. Remember that carbon copy paper you used to copy? I had the carbon copy paper. I would assemble everything together, and
Uh-huh.
as she would do it, she would pass it right next to me, and I'm going through getting the stuff filled on now. So I got a chance to learn at an early age how
Hmm.
you can have two people who make the exact same amount of money, but based on the things what they do when it comes to taxes, they can have two totally separate different outcomes.
Nice, nice. So, see, what people I think people don't realize, Michael, is very simple. That you know, taxes are made to benefit entrepreneurs and businesses because they are constantly bringing in new tax people. For the government. So, who you gonna get a benefit to? Somebody who's bringing you new taxpayers, or somebody who's not bringing you new taxpayers? And that's the beautiful thing. So, I understand your parents got you interested in doing this taxes. What did you find fascinated about doing it before we get into what people can actually take away and benefit in doing their taxes?
I say the number one thing is I saw that the wealthy, it was a wholly, totally different game for them.
Mm-hmm.
They had tax accountings and advisors who
Mm-hmm.
advised them every step of the way. And when I saw that they paid exceptionally much lower tax rate, and they weren't breaking the law. So that's the main thing. They weren't breaking the law.
Right.
What do I need
Because
to
they're
do?
using the tax code to their advantage because
Exactly, exactly,
you shouldn't know taxes, period.
exactly. And the one thing that stops most people from succeeding when it comes to taxes is they don't know how to do proper production deductions.
Uh-huh.
They don't understand there's two things when it comes to the deductions. There's ordinary expenses and
Uh-huh.
necessary expenses. In every industry, they're going to be slightly different and slightly variations. And so when it comes to record keeping, that is the holy grail for
Okay.
keeping yourself safe with the IRS because documentation beats conversation.
Hmm.
And see, with technology now, it's not like the old days. In the old days, people would just take the receipts and throw them in a shoebox.
Exactly.
Exactly. See, now we have apps now that a person can have hooked up to their phone.
Uh-huh.
As soon as they get their receipt, I tell them you take a picture of it as soon as you receive it. And then that way, people say, well, if it's, I take a picture of it, then IRS won't accept it. Nope. The IRS, anytime you take a photo digital picture and it's in an app, as long as the app is IRS compliant, once that picture is there,
Hmm.
It is used. You could use it for your deduction, because the bottom line is this: people want the biggest thing I try to explain is this. This is why the person who works 9 to 5 is losing. You got two people. One person works a 9 to 5, makes 100,000. If
Hmm.
another person makes 100,000, they're an entrepreneur. See, the person who makes 100,000, who works a 9 to 5, they're getting taxed at 30%. So
Wow.
they're paying $30,000 right off the rip in taxes,
So they're getting taxed at 30%. Why?
because the tax code, they're not utilizing the tax code to their advantage.
Wow. That's
Now,
amazing.
so the IRS, the government gets their money first. See, the government is smart. They said,
Uh-huh.
we don't trust you to pay your taxes. So we're going to take it out your check before you even get it.
Uh-huh.
And
But you know,
so,
you know what I heard back in the days, that there was a time, I'm sure before our time, there was a time that, people paid taxes on the honor system. Like, you send in how much you thought you should send in based on the money you made, and they learned real quickly that that didn't work.
that was 1911, 1912. Anything after
Wow.
19, yeah, anything after 1913. Once the Federal Reserve came into play, they said
Okay.
we're not gonna do no honor system with these people. We gonna have these employers take that money right out their check.
Wow.
And
That's
see,
amazing.
yeah, and see what helps, what hurts right there. Because see, now at that person who works a 9 to 5, they already lost 30,000.
Okay.
So now they at 70. Now, once you add in property tax, sales tax, excise tax, now they down. Sometimes they down to 55, 60,000. So they have lost half their earning power
Mm.
right off the rip.
So let's get down to the nitty gritty. You got the everyday worker who's making six figures, let's say, and then you got the entrepreneur. So let's talk about some of the benefits of the everyday worker, that can make tax work for them, and then we'll push over to the entrepreneur that can make taxes work for them, because people don't realize that, people always look at taxes as being you know being a scary thing. What I've learned as an entrepreneur, and I've learned as a businessman, is very simple, that taxes are your friend if you learn to play the rules.
That's right.
I always say, don't hate the player, don't hate the
That's right.
game. Learn the rules so you can learn how to play. You
And you
understand what
know,
I'm saying?
that's right. And you know, the number one rule is you have to keep your documentation,
Mm,
because the IRS already has a 95% success rate against a person who has a 9 to 5, and if they're a solopreneur, they have
okay.
a 94% success rate on getting money from you, because your documentation is not lining up.
Wow. So like when a person's come and to get audit, they're looking for what?
They're looking for receipts, documentation, and also proof on why you took that deduction. Let me give you a prime example. A friend of mine had a client. They bought a yacht.
Okay.
The yacht was the yacht was $150,000. The IRS ordered the young lady, and told her, you know what, we're going to disallow that yacht, and you're going to have to owe us taxes.
Okay.
And so she came back and said, I need that for my business. We don't see how you need that for your business. And she said, let me show you how. I am a realtor. I sell waterfront property. When
Okay.
people come onto my boat, I'm able to show the house from the water view. When they see the
Woo!
house from the water view,
Yes, yes,
it
yes.
changes the whole perspective on them wanting that house.
Uh-huh.
And
I like that.
that wiped away the debt just that quick and fast.
Wow. Now that's powerful though. And the thing
Yes.
about it, she wasn't lying,
No,
because if you're selling waterfront homes, what better perspective to get it is from the water.
that's right.
You know what I mean? And because most of the people passing waterfront homes, they buy the home so that view and the whole shebang. Now, if she's using it to help her clients get a greater picture of what that means in purchasing this probably expensive property, man, that makes a whole lot of sense. And that made she was a very smart move, man.
Oh yeah, absolutely.
Okay,
It's
so let's talk about the everyday. employer, what are some of the things that they can write off on the taxes to benefit from?
Right now, a person works 9 to 5. The number one thing that uses a 401k plan.
You can write off your 401k plan?
What I'm saying with the 401k plan, when you put money into it, that money's not taxed. So if you made 100 and you put 30 of it into it that year, at 30,000 into it, you're only gonna get taxed on the 70 versus the 100.
Oh, wow. And why is that?
Because that's one vehicle that's set up for people to have money for their retirement. Because
Mhm.
the old system has been abolished for the most part. So the old system was you get a job, you get a pension and Social Security, and that was enough to sustain you for the rest of your life. Well, in the last 15, 20 years, the pension system has been broken up.
Mhm.
Companies no longer want the burden of taking care of someone to the day they die. So they switched over from the pension system. They're pushing people into the 401k systems.
Oh, wow. That's very powerful. I didn't know that. And what's another thing that people can write off as a regular employee?
They can get a health savings account,
Oh, what? I'm sorry.
a health savings account,
Okay,
HSA.
explain that.
Health savings account set up so just in case you have medical emergencies, you have money already there and it's already tax free. And depending on the situation, if you hadn't used it if you haven't used it in a such long period of time, you can also withdraw from funds from it tax free.
Oh, wow. Man, I'm loving this. Just in case you're just joining us, we're speaking to Michael Muse of Muse Income Tax Services, LLC. You guys are based out in Detroit, correct?
That's correct. But
Wow, man.
we have clients all over the country.
Wow. That's the beauty. You can service people all over the world. We're talking
Absolutely.
about some of the benefits and how to learn how to keep. Remember, ladies and gentlemen, no matter whether you're on LinkedIn, Facebook, wherever you're watching this, Vanoy Media, it don't matter where you're at. Just know this. It's not how much money you make, it's how much money you keep.
That's right.
Now, Michael, I've often been told that the best tax return is zero. And here's why I was told that. That means you didn't pay too much money and you didn't pay under too much money. You paid
You
exactly what
both
you're supposed to pay,
you
and
both
they
even.
don't owe you nothing and you don't owe them nothing. But that's
Absolutely.
never the case. Why is that?
First of all, a person who works a job 9 times out of 10, they don't have the proper withholdings coming out their check. They have too much. 80% of Americans have too much money coming out of their checks.
Oh,
So
really?
yeah. So they're giving the IRS a tax-free, interest-free loan for the year.
Yeah, that's the way. I want you. Can you repeat that for the people that didn't hear it in the back of the church?
The
Can you
people
repeat
who
that?
are overpaying in their checks when they get paid, they are giving the IRS an interest-free loan.
Wow. See, that's a beautiful thing, man. And then all they're doing is giving you the money back,
Giving
correct?
you the money back, and you don't get no interest on
Right. And then they just start all over the
it.
next
Start
year.
all over again.
Man,
So
you
that's
better shut
so
up.
that's the first step. They need to correct their W-4. That's the first
Okay.
step. Correct your W-4.
And if people want to know more about this, how can they reach out to you in
They,
doing these things? Because I don't want you to give the all shebang. They need to holler at you,
they
man.
need to call. They need to call. Talk to me. That's not just me. I have a team behind me also.
Oh, okay.
The number is 833
Uh-huh.
972
Uh-huh.
2004. That's right.
One more time.
833
Uh-huh.
972
Uh-huh.
2004.
All right, cool. Let's get down to business, man. All right, go on. What's next up on the agenda? I'm loving this, man, because man, you know what I realized, Mike, is that the more you know, the more you grow.
Absolutely.
Point blank, no
Uh,
matter how you look at it. The more you know, the more you grow.
prime example for entrepreneur. I had a client last year. He had been on previous years. Every year he was on 65, 70, 100, $220,000.
Uh-huh.
And when I took care of his taxes last year, he went from on $120,000 to only on $3,000
Okay.
because he had his tax strategies he was missing. He has children. I showed him how to institute a program together to pay his children. So with his two kids with a standard deduction at 13,000, that's 26,000 a year right there.
Mm.
I also showed him how to. He likes to party and have fun with his employees. So I
Okay.
showed him how to use his home and use the Augusta rule. And so he has a huge backyard. So he rented. I had him. He rented his backyard to his business
Okay.
for $1,500 a day for that weekend.
Wow.
So now that's another $5,000, not including the money that he spent to entertain everybody, which was another $5,000. So in one weekend, having fun, he saved $15,000. So
Wow.
that's the thing. That's the key. The
It's
key
learning
here,
how to create your lifestyle and your lifestyle business to
exactly.
be a benefit towards you instead of the other way around.
See, the thing is, we're all going to spend money. We're all going to pay bills.
Right.
There's no getting around that. The key is turn any event into a tax deductible event.
Ooh, I like that. Say that one more time for the people in the back of the church.
Turn
Turn what?
any money event into a tax deductible event.
Ooh, yes, I love that, man. I know your clients be happy when they
Oh
get
yeah.
finished with you, boy.
When they come scared. Now I tell people you need to understand certain basics
Uh-huh.
about your industry. Once you understand the basics about your industry,
Uh-huh.
you have to know that when you take a trip out of town. See, I don't take pleasure trips. Every trip is business trip. I may go for the I may go for
I
I
like
may go
that. I like that,
hey,
Mike. I like that, man.
I may go for the sun and fun, but I'm gonna make sure I meet some business contacts
Okay.
and
I
do
like
some
that.
networking along the way. I'm gonna
Mike
make
say,
sure it's documented that I'm not just here. I'm here also to talk business and to make money. See, that's the key. That's what scares people. Let's talk about the misconception.
okay.
People are scared when it comes to business and taxes, but the IRS code is already set up that as long as you attempt to do business, you can write off expenses.
Mm.
I'm gonna say it again. As long as you attempt to do business, you can write off expenses. Now, would they let you just write off expenses every year, the same ones, and you're not making money? Absolutely not. They're not no fool
Right,
either.
right. Yeah, I want people to be clear about that too, Mike, that you don't just get to write off taxes if you're not making money in your business, because
Every
to them it's
year.
a hobby, because there is no business that's in business not to make business and not
That's
to
right.
make profit, correct?
Yep, that's right. And let me talk about some of the things that the IRS looks at, but also if you're trying to get a loan and build your business credit. Number one,
Okay.
having an LLC. But let me explain. When having an LLC, that protects you from being sued.
Hmm.
But it only protects you if you don't commingle your funds. And over half, most LLC owners who get audited, they commingle their funds. They show where they
Okay,
have.
explain that for people that may not know what commingle means.
That means they have taken business funds and using it for personal reasons.
Okay, okay. So that stuff should always be separate. Is
It
that
should
correct?
always be separate. So that means you need, once you start your business, get your LLC and get your EIN, go
Uh-huh.
open up your business bank account.
Okay.
Once you have your business bank account, actually get an operating agreement. An operating agreement is going to explain the structure of your company, how much you started with,
Hmm.
who's the owner, how you function, because the banks and lending institutions want to know who is your business and how do you operate. If you can't show how you operate, and if they only see it's just you, anytime a lender see that it's just you and there's
Hmm.
nobody than just you, you become a quote unquote credit risk to them, and
Mm.
they don't want to deal with you. And the next part, when people who are just a one person LLC, too
Okay.
often they come to me and say, I got my business, I need you to file my business, and here's my personal. No, when you have an LLC and you're a single person LLC, your LLC and your personal all goes together on a Schedule C on the IRS form.
Okay.
So it's not a separate entity. It only becomes separate when you have a partner or you actually do a file a 2553 and you opt out to be taxed as an S corp status.
Okay. That makes a lot of sense.
Yes, Absolutely.
That makes a lot of sense. Wow, man. If y'all didn't know, Michael Muse is over here dropping these nuggets, man. I hope y'all writing down what he putting down. All right. It's just that simple. So, Mike, let's push over to the entrepreneur, because there's a lot of people who are entrepreneurs and they're onepreneurs and twopreneurs. And, some of them are making money and still making big mistakes. Let's talk about that. What are some of the things that entrepreneurs can be open to?
They need to have one of the best things I tell LLC people who have LLCs. If you want to grow your business, get you a board of advisors.
Uh-huh.
And when you get your board of advisors, use those people to and make sure they're smarter than you and make more money than you, and they've already crossed the road you've been across.
Uh-huh.
And with your board of advisors, you be able to make better decisions in business. And also, every time you and your group and your board of advisors takes trips, everything's 100% tax write-off. So just imagine you meet with your board of advisors every quarter, and it's at a different location around the country. That's a
Uh-huh.
full tax write-off.
Wow. I like
And
that.
and when it comes to lending, when they see that you have a board, you look more credible. One of the next biggest mistake they make is not having a branded email.
Okay.
When they
And,
use
and
G,
why is that important? Like, I've heard that a lot of times. Why is a branded email important? Why it just can't be Joe Smo at Gmail?
because they figure if you just use the Gmail account, you're not in business. People in business are in business all the way, not part of the way.
Oh, okay, that makes sense. So in other words, if you're really playing business and you're really playing big boy, then you would have a company email under your company URL. Is that what you're saying?
That's correct. And if you don't have a website, at least have a landing page with 3 pages, like I do. I don't have a full web page, and I got 3 simple pages: bio, get in contact with me, and what we can do to make your tax situation better. Period.
Wow. I like that. I like that. So, what are some of the things that in an entrepreneur don't take advantage of that they should be taking advantage of when it comes to their business? Because remember, people got to understand, Mike, and we only got about 8 more minutes here. People got to understand that you can only write off of the profit. Is that the understanding? So, in
That's
other words, like if you got to be making money to even have that write off. So, if you are not making money, if your income is zero, but you want to write off $10,000, that's not going to work.
not at all.
Correct?
Not at all. It's not going to work. So,
Right. So,
where a lot of people fall in at is that they have a job and they have a business. So,
okay.
so with their job, they already have taxes being withheld. So if their business, if their job, the job pays 50 and their business made 50,
Hmm.
all their expenses from the business can lower their tax liability from the
Okay.
W-2.
Okay. That makes
Absolutely.
sense.
Hmm.
Right. So let me ask you, what is the best business setup when it comes to doing your taxes? And what I mean by that, you have LLCs, you have S corps, you have C corps, things like that. What is the best business setup when it comes to benefiting your business the best when it comes to business?
Well, one of the things we advise people on is look at long term. Where are you trying to go next 5, 10 years from now? And if you're trying to go invest, if you're trying to actually sell your business in the next
Hmm.
3 to 5 years,
Hmm.
you need to be in a C corp because it's going to be scalable and investor ready to sell.
All right.
But if you plan on
Why, why,
keep,
why, why not a LLC?
well, first of all, if you actually want to go, like I said, if you're actually trying to set up the business with a board and have stock, you definitely want to go for C corp. But if that's not the course you're going, definitely want to start off at LLC. And if it's just you definitely want to look at once you have a net income in your business of $50,000. At that point, you need to go ahead and elect and be taxed as an S corp.
Hmm. That makes a lot of sense. That makes a lot of sense because see, all my companies are in S corps.
Absolutely.
I don't have LLCs, and in that capacity, because I operate corporations, and I'm just in that aspect where I've been around for a while, so I know what the tax benefits, how they benefit me and my companies versus being another entity. So what are some of the pitfalls people need to watch out, especially being an entrepreneur, when it comes to their taxes? And is there the question number two, is there a different date that entrepreneurs must put in their taxes versus non-entrepreneurs? Now,
Uh,
entrepreneurs April 15th, but
yeah,
corporations, don't they have a different tax break?
yeah. Corporations, especially C corps, a lot of times they may change their fiscal year, and their fiscal year may end in April and start in April versus January to February. But
Okay.
that's usually something that when a person's in business, they need to consult with their attorney and their CPA on.
Oh, okay. When it comes to that. All right. So,
Because
like, my other question was, what are some of the pitfalls entrepreneurs, especially solopreneurs, are making that's not benefiting a company the right when it comes to their taxes?
they're not doing enough research about their own industry to get the proper rounds for the industry. Number one. Two, they've gone to the standard brick and mortar big name companies who don't take the time and attention to detail. They actually show them how to take situations and things that they need for the business to write it off.
Okay. So in other words, they're not setting their company up properly to be
Absolutely.
the in a beneficial state when it comes to those taxes, right?
Absolutely. If you prime example, I'll use you exactly where you are. You have an S corp.
Hmm.
If me and you make the exact same amount, if I'm in an LLC status, I'm going to pay 15.3% more to you just in self-employment taxes.
Ooh. Hey, that's why I know my lawyer did the right thing.
But guess what? You paid them well.
Uh-huh. Exactly. See,
Hey,
one thing about me, Michael, I hire smart people.
exactly.
People that are smarter than me. You know what I mean? I ain't about to make them mistakes. If you're an expert in this, I'm gonna probably hire you because I want you to make sure you're the best in that. I'd rather have a specialist in this area, a specialist in that area, a
That's right.
specialist in this area, where they can do what they need to do so that I can live comfortably and do what I need to do as the CEO of these different companies, in that capacity. Right. So
That's right.
let's talk about cars. A lot of times I hear people saying they want to be able to write off their car, because they're using their car for business. How does that work?
Well, first of all, if you only have one car, it means you can't write off the whole car because they already know that you still use the car for personal.
Ah, I gotcha. All
And
right.
so the way the IRS code is set up, you're either going to write off your miles, which is the most majority of people go. They write the miles off, or they do the actual deduction and expenses. So
Mm.
that's usually the way it goes. But also the key is when a person buys a vehicle that weighs more than 6,000 pounds, they're able to write off over 80% of all that cost in the first year.
Mm. Interesting.
Last year was 100%, but they dropped it down to 80% this year.
So I also heard, Mike, I don't know if it's true. Maybe you can, you can do it. I heard that if you put the car in the company name, then you can write off 100% versus it being in your own name.
Yeah, you can still write the car off, but see now this is where the liability come in. If someone sues you, now they can take your car because that's an
Explain.
asset. Because that's an asset in the
Of the
that's an
company.
asset in the LLC now.
All right. I mean, LLC, corp,
Yes,
whatever it is, it's the same. It's the same across the board.
yes. Once you put that asset into the company name, and once you're sued, that's part of the asset. And that's it comes down to the asset protection. That's the reason why wealthy people set up their trust,
Right.
and they have their trust on the holding company, and the assets are in the trust, and then they have an operations company up under there. So it's their steps to protect for a person to protect their assets and protect their
Right.
wealth.
Because then they're going to come after the operational company or the LLC and
And
then go
there's
to the
there's no
whole.
and guess what? There's no assets there for them to take.
Boom. Man, I don't know if y'all understand what this brother is putting down. See, this. I hope this is your lunch lunch and learn here, because man, you just dropped some powerful information that if the entrepreneurs are really paying attention, how they can save a lot on their taxes, but also how they can protect the assets
That's
of
the
the
key.
company. So a lot of times we listen to all of these big hooplas, like situations, but it doesn't get down to the nitty gritty. And like I say, you don't hate the player, don't hate the game. You learn the rules so
That's
you can
right.
learn how to play, my brother.
Absolutely.
That
Yes.
is powerful. Why do you think people have such a fear of doing their taxes and want to do everything so they don't have to?
Because they hear the stories of people who they hear the stories of people who evade their taxes. They hear about the Wesley Snipes, the Red Foxes, the people who the IRS come after, and they
Excuse
so
me.
so that fear is there, and that's how our government operate on fear when it comes to paying your taxes. They say, as long as you're in fear, we got you. But when you know the rules and you know the game, there's nothing to fear.
Makes a lot of sense. Absolutely, that makes a lot of sense. Oh man, listen, we're gonna have to have you back on the Benny Randall show, man, because I'm telling you, you was dropping some nuggets, man. So once again, if people want to reach out to you, because you service people all over the world, right? They don't have to be in Detroit to
No,
use your services, correct?
absolutely. I have clients in California, New York, Florida, and Maine.
Okay. Give the viewers. I'm so sorry. Some
You give me a call at 833
okay.
972 2004. And that number is 833 972 2004. We've been
Okay.
doing this over 50 years. And
Ooh,
we didn't just start this. We didn't just figure out we want to get into the game. Ever since I knew how to write numbers, I've been dealing with 1040s and Schedule 1s and Schedule C's and Schedule E's and Schedule D's, all the schedules. You just need to schedule time with me so I can set you up for success so you can have your tax breakthrough.
I love it. I love it. Let me try to put that in the chat. That's eight, because this is across several different platforms. That's 833
972
972. Okay.
2004.
2004. My man. So y'all could check that out. I put that in the comments over in LinkedIn and across the board, et cetera, et cetera. If y'all, you have comments, but man, we're gonna have you back on, man, because you was dropping it like it was, bananas. You hear me?
Well, I
I
appreciate it, man.
appreciate it.
You
What
got
is closing out right here now? The time goes so fast when you're having fun.
yes, it
What
is.
is your last final words about doing your taxes, and doing your taxes early too? Don't be waiting till the last minute. A lot of people like to wait till April 14th and be trying to do it.
Number one, you know who you are. If you're not organized, pay someone to help you get organized to keep
Mhm.
that stuff in order. Don't be the person going into IRS and the audit with a shoebox talking about, I got it right here. All you're going to do is get stuck with a bill and interest and penalties. That's not worth it. Put yourself in a position to win. If you only put yourself in a position to win, this is the rule of thumb. Documentation beats conversation. If you want to win against the IRS, have your paperwork in order. Those who have their paperwork in order win. Those who don't lose. We're a winning team. If you want to win, connect with me.
I like how you said that. Those who got their paperwork in order. Man, you better ask somebody. Michael, I appreciate you coming on the Benny Randall show and Vanoy Media over here. And it's been astounding. And we're going to do this again, man, because I think this is a topic that can go on. It don't even have to be during the time of taxes, because you can be in yourself in preparation, when it comes to doing taxes throughout the year. You don't have to just wait to write to April 15th, et cetera, et cetera.
Absolutely.
If you're
Yes.
setting yourself up to win, you're setting yourself up to win, point blank,
Absolutely.
right?
Absolutely. As you always taught me from the very beginning, you must have a system put in place. People have systems in place, live a stress-free life. People don't have systems, have to do all the work. Therefore, you will have a stressful life.
My man. And with that, can you give people your website where they can reach out to you, and give your number one more time, and we're going to bounce out of here.
Number is 833 972 2004, and the website is museincometax.net.
Ladies and gentlemen, thank you for joining us another edition of the Benny Randall Show. I'm your host, Benny Randall Jr., aka the Motivator, and it is my humble pleasure that you allow me into your hearts and your homes. And we're going to be dropping these new videos, on and on and on to drop, make it even more personal. Or you can still catch the regular show on Bashani Radio at bashaniradio.com or download the app. But, we want to make it even more up close and personal when it's coming to this and, dropping it to you. And I really appreciate you allowing me into your hearts and your homes. All right. So you want to learn more about me, you can go to bennyrandall.com, or you can reach out to us. It's bashaniradio.com. Listen to the audio podcast over here, over there, and over here we'll be bringing a video podcast. Until next time, I appreciate you. Remember, you are a winner, but you got to wake up every morning like you won, and you'll have it. Until next time, I love you, and you can't do a damn thing about it. Good night.